Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.exchange. What happened so far in the June series? On the first trading session of the June series, Nifty opened gap up about 150 points and further it moved another 100 points. So that was a big move of about 250 points. And then after that, Nifty has been consolidating between 18,500 and 19,000. And why I am saying this is the pattern exactly for the last 2 months also. April series also, the first trading session, there was a big up move, and after that, the entire month consolidation between 17,500 and 18,000. And then the next series, the May series also, the first trading session, there was a big up move. After that, consolidation between 18,000 and 18,500. And of course, with a huge volatility. And now consolidation between 18,500 and 19,000. So this is one possible scenario. I've also came out with another possible scenario. If you look at the last year, and from September expiry, Nifty closed around 16,800, October, November, and first half of December. In the 2.5 month period, Nifty shot up 2,000 points. After shooting up 2,000 points, then somewhere from the middle of December, market started falling and it fell. The entire 2,000 point gain was wiped out during the next 3.5 months. But now if you see, it's exactly the same. And March expiry, Nifty was around 16,800, and April, May, and first half of June, and Nifty shot up nearly 2,000 points, and now started correcting. It has fallen about 200 points from the high, and now will that history of last year December repeat? So that is a big question. So there are two possibilities. Either the market can continue to fall, or it can trade with a huge volatility between 18,500 and 19,000. I think this argument I have already given earlier. But to me, it looks like the second possibility, that is 18,500 to 19,000. Sorry. So 18,500 to 19,000 with a huge volatility. So that is what I think it is going to happen. And already Nifty fell 200 points. Now on Friday night, SGX Nifty indicating about 50 point gap up. So that means, tomorrow we open higher. So then, again, we are comfortably between 18,500 and 19,000. However, last Friday, FIIs were on the net sell side in the cash market. But that is, we have to ignore. That's because Canadian pension fund has sold huge amount of shares in Kotak Bank. So that could be one of the reasons. So the next week, we need to see whether FIIs continue to sell, and also we need to keep watching crude price movement, because now there are some indications that, if the crude prices fall further, and the oil marketing companies may reduce their prices. So if that happens, that is good. In fact, the market, I think it has been expecting this for the last few months. So that is why auto sector is one of the best performing sector for the last few months. Not only the last few months, even last week also, it was only FMCG stocks and IT stocks that dragged the market down, whereas auto index was higher. So auto index is really looking good. And last week, though markets, lackluster, but mid cap, small cap stocks are doing extremely well. There are so many small cap stocks, shot up more than 10%, 20% in last 1 week. So the broader market is looking really very good. It is only the index heavyweight, as I have been telling you, TCS and Infosys more than 20% lower from the recent high, and HDFC and HDFC Bank anyway has been a huge underperformer for last 3 years. And then, Reliance is also not going anywhere. So these are the 4 or 5 top index heavyweight stocks which are not performing But despite that, we are very close to all-time high. So imagine what will happen if this index heavyweight catches up. Since the entire market is looking good, broader market looking good, sooner or later these index heavyweights may catch up. So that is the reason why I'm thinking that, it can be between 18,500 to 19,000 with huge volatility. So since the beginning, I've been telling you, for short term, it is 18,500 to 19,000. For up to the month, it is 18,000 and 19,000. And that's very simple, there's no need for any big knowledge. 18,000 put option has the highest open interest among the put options in monthly expiry. 19,000 call option has the highest open interest among call options in monthly expiry. So that indicates a range of 18,000 to 19,000. And weekly expiries, most of the time option sellers lose money in the weekly options. And I'm sure yesterday they would have sold huge amount of call options. And tomorrow gap up, if it sustains, if it moves higher. So it'll be difficult. So very short term, it's very difficult to manage the positions. So overall, the view remains the same as last week. Last week also I said the same thing. 18,500 to 19,000 for weekly, 18,000 to 19,000 for monthly. And now also I'm repeating the same thing. But the only thing is now it is 1 week less. We still have 3 more weeks and it's a very long expiry. But of course, there's one public holiday on the last week. So therefore, we have only about 13 more trading sessions in this expiry. So the time value will help option sellers, right? Especially for position option sellers. So keep watching crude prices, FII flow, and then rupee movement, and also keep watching the underperformers like TCS, Infosys, HDFC Bank and HDFC. So one good thing that I observed in this week, and last week the HDFC Bank and HDFC was very, very weak. Now that is turning around. Even on Friday night, HDFC Bank ADR was up about 1.5%. So because HDFC Bank has the highest weightage in Bank Nifty, so if HDFC Bank start doing well, the Bank Nifty and financials will tend to do well. So last week, RBI policy, as expected, it was a non-event. But this week, inflation data is there on Monday. And then later, another 1 or 2 days later, wholesale price inflation. And Monday is a consumer price inflation. So, consumer price inflation is expected to be lower than the last month. So that's actually good for banking stocks. And of course, internationally, the Fed meeting. And just like a RBI policy, the Fed meeting is likely to be non-event. So there's going to be no rate hike. But however, there may be a slightly hawkish comment by the Fed chairman, but that has already been factored in. And US markets are trading close to 2023 high. And so they are also very, very bullish. So overall, we maintain the bullish view with a view that 18,500 to 19,000, the markets may trade with huge volatility. So we'll turn more bullish if 19,000 is crossed on the higher side, and will turn more bearish if 18,500 is broken on the downside. So yesterday I came out with a video. So why Nifty cannot go to 22,000 during the next 15 to 18 months. So I think, any fall from here, maybe, 5-10% must be a buying opportunity. But market has already given 2 buying opportunity around 16,800. And so those who have not taken that opportunity, now they may have a FOMO effect. So that is how market behaves. No matter what is your skill, the market is designed to reward only the minority people, not the majority. So hope you enjoyed watching this video. Thank you for watching.